Rohr here with an early global view on Monday, May 11th, 2015. It's currently 7:10 a.m. U.S. Central Time, coming to you just a touch later than usual because we had a bit of a technical problem we managed to sort out right away. And very interesting markets, of course, late last week and into this morning with some very important macro factors, and it's interesting to see how the markets are reacting. So, what does all this mean to the markets? Well, we've got, as usual, 30-minute S&P chart on the right, hourly on the left, and you can see the gap higher on Friday. I mean, coming up off what looked like it could be another failed challenge of this over-under area at 2,088 to 90 out of Thursday, even though the market was on a nominal up break out of 2081. The market basically gapped higher from 2084 to a low of 2103. So, in other words, a $20 gap higher, but then didn't go much of anywhere. This was very interesting, especially as from early in the day, we had seen the hourly and 30-minute MACDs that were firm on Thursday jump out above their upper runaway bands, and very often this means the actual price activity can feed on itself as well. However, this market getting back above the old lead contract all-time high, getting back above the old June contract all-time high around 2107, couldn't get back below that, but it still has the downside reversal from a couple weeks ago Monday at the 2112 with a tolerance of 2114 and a half that it could not push above. And in fact, this morning it's sitting here around steady at 2109 after having been down to about 2106 or so again. So it's going to be very interesting to see if the psychology today or additional data, which is still kind of sparse on Tuesday, doesn't really get heavier in terms of important data until Wednesday of this week, whether it can push through 2112 to 15 to head on to the next resistances, nominally at the new all-time high at 2119, but the oscillator resistance is until up around the 2135 to 40 area on the rising 41-week average we'll see on the intermediate term charts. And also it's going to be interesting if it weakens enough to put this MACD back below that upper runaway band. And that pretty much does it for the short-term view of the S&P 500 future.